first video of the week. Remember, I said I would not be posting one on Monday, but tried if I could. And old times, but this is the first one. So we're looking at the dollar index. I'm going to try to go through this briefly, and I'll have some comments at the end of this video, kind of like tinfoil hat-esque type things. So I'm going to try to keep that towards the end. I'll let you know when we're done all the charting discussion. So that way, if you don't want to hear any of that stuff, you can excuse yourself from the rest of the video. All right, so dollar index daily chart. You can see we did get our run up into buy-side liquidity. I like how we gapped open here, traded back down, filled in the gap, rallied up. I said I would like to see that on Monday. Monday was just really nothing. We actually opened up lower than Friday's close, rallied up, and then we had a nice opening here. This is the maneuver, if you will, that I was anticipating for Sunday's trading, but it still delivered like we were looking for, so that's fine. Dollar index hourly chart. You can see how we had small buy-side imbalance, sell-side inefficiency here after taking out the low here. So we had what I mentioned on Friday, which was a pattern I learned from Larry Williams. A pattern I learned from Larry Williams a long, long time ago, which was the outside day with a down close. And when you're in a bullish market, that can set up a bullish run. And you can see we got that here. Some of you are probably thinking, wow, that's really cool. It works in opposite as well. So if you're bearish and you see a outside day with an up close, that's bearish, and it sets up a opposite of what we see here, which was outside day down close, bullish, outside day up close, bearish. Okay, so again, let me take you back up to the daily chart. This is that day here. We have a higher high than the previous day, lower low than the previous day. So what's essentially happening is the market goes up. Let me try to see if I can remember how Larry Williams stated this. All right, so what happens is the market opens up, starts to go higher, takes out the previous day's high, then goes down and takes out the previous day's low and closes on the low. So it kind of like washes out all of the traders. When you're cleaning both sides of the marketplace like that and you're bullish, it sets up this scenario. So this is a really nice short-term trading pattern. If you have a liquidity pool like this, or if it has like an imbalance that would maybe reaching up into here, but this is a clear, obvious premium array. But this is a clear and obvious premium array with buy-side liquidity. Just a beautiful setup. It's just wonderful to see it pan out like that. But let's go back into the hourly chart. Hourly chart creates a buy-side imbalance, sell-side inefficiency, trades down and leaves a small portion open. We like to see that. Again, when I say we like to see that, I'm specifically referring to myself because this acts as a gap that shows an unwillingness to want to go back down into that. And if it starts to rally, that's really bullish. So we have another imbalance in here. We trade down into that, rebalance, relative equal highs, rallies again, institutional order flow entry drill, and rallies for the buy side liquidity. I'm going to stay with the bullish stance on dollar until we get to that old weekly level, and you'll have to go back into your notes to get that level. All right, dollar index, 15-minute time frame. Again, you can see the imbalance on the hourly chart. We trade down into it, leave a small portion open. Bullish order block, fair value gap, trade down into it there, accumulate 2 down close candles here with a fair value gap. That's trading into the Judas swing for the low of the day. Then it rallies up and then sweeps multiple times inside of that buy-side liquidity pool on the daily chart. Again, focusing primarily on continuation on the upside. If we break down, I'm not bullish if we take out these lows. As long as we're above these lows here, then I'm good. That's that small little gap I said I'd like to see remain open. Well, that's it. I have to see it stay open, and I'm still bullish. Euro dollar, daily chart here. I mentioned this last week, how we went back up into the imbalance here. Traded down for the sell side liquidity pool here. Fell short of reaching below this one, and obviously the next one would be down here, which is the relative equal lows on the daily chart. if you pull this level up on your daily chart, you'll see right away which actual double bottom, that relative equal low, we've been referring to for months now, where the cash market didn't trade below it, but the futures market did. Okay, so you know what I'm talking about there. I still think that's the draw on liquidity for it. Didn't want to go down. It was reluctant because Euro Pound came into the chat. So we'll mention that when we get into cable. All right, Euro Dollar, hourly chart. Small little sell sign bounce, buy side inefficiency here. On Friday, we traded up into that. I mentioned when it had formed this high here, I said I'd like to see it stay open right in here. It did. It almost went up there and completely closed it in, but it left that portion open. So what we were looking for dollar and on euro to keep things germane to the analysis, which would be bullish dollar, bearish euro, we had that gap stay true to form. Market breaks down, creates a sell sign and bounce, buy sign inefficiency with a mitigation block right there. So it trades up into that, consolidates, then works lower, comes right back up into a bearish order block, sells off once more, comes right back in, rebalance, and then we're just consolidating. Now notice the consolidation's been drifting lower, but still really, really tight ranges. That's going to be a strong contrast to what we see in British pound versus US dollar. 50-minute time frame euro, bearish order block here, trades up into it 1, 2, 3 times, and then rolls over, creates a small little fair value gap there. Bearish order block, last 3 up close candles, trades up into it there, sells off on a Judas, consolidates, pumps it one more time up into the discount low of the fair value gap, premium high, sells off, clears the sell side liquidity resting below here, and then consolidation into the close of the day. All right, pound dollar. I mentioned that I'd like to see that stay open. We got that. I mentioned that we traded back to consequent encroachment of this wicks candle. The consequent encroachment of this candle's tail, and trades there. And we had sell side here, and we fell like gangbusters. It's just beautiful delivery of price. This run here is like rocket fuel for euro pound to rally, because we have euro dollar in consolidation being heavily manipulated, cable here dropping with a large range into the sell side liquidity pools that we were anticipating. So we had that here, and we dropped down into the 15-minute time frame. You can see bearish order block, we trade up into it there. Optimal trade entry, sells off, just a quick run. Low resistance liquidity run signature, low with a higher low to the right. We smashed through both of those old lows here, which is the blue lines. And then here we are closing in on, and here we are near the low of the day. 15-minute time frame, just a straight run. Short little Judas swing overnight, returning back into an old imbalance there. I'll let you pull that up on your own chart between this candle's low, this candle's high. Extend those levels out in time. Returns back into that for a premium array. Sells off, bearish order block here, and a New York session fair value gap there. Then sells off and attacks the lower level sell side liquidity pool here. Now, I did not want to pull up the euro pound chart because I'm going to talk a little bit about that in midweek review. So for your own study, take a look at the euro pound on the forex.com version of it. In other words, we're looking at pound dollar forex.com feed. You would pull up euro pound forex.com feed, okay, and do your markups from the weekly, daily, 4-hour, 1-hour, 15-minute time frames. And I'll include that on Wednesday's video. Beautiful run on cable though. If this is going to drop in a trending model, while euro is being manipulated and held in consolidation, euro pound is going to go vertical, straight up. and that's why you see what you saw. Okay, so let's go into the homework for tonight. I guess really technically you have two forms of homework, don't you? Looking at euro pound, and then obviously what we have here. We have E-mini NASDAQ futures, the December 21 contract. The symbol you will use for TradingView is NQZ2021. And you want to have about this much data here. I'm really showing way too much for this, but we're looking at this high down to today's low. Okay, today's high down to today's low. You can get fancy and use this low here, but for now we're just going to use this because that's the time of this capture here. So this time when I took the screenshot, but if you want to include this low for your markup in your analysis, that's fine. But why did the market go here and then subsequently trade down to here? Go through your daily, 4-hour, 1 hour, and 15-minute time frames. Use all the intermarket relationships that I've taught you in the mentorship that you understand how to use, and what I've been sharing as it relates to index futures in recent days and weeks now. And I'll have that as a review in your homework portion tomorrow. And obviously, as I mentioned, euro pound will be the highlight of the midweek commentary. So there's your homework for tonight. I'll catch up with you tomorrow. Until I talk to you then, be safe. All right, now